What's going on, everyone? Sibongiseni Dlamini here. I'm back here with another video. So today, just want to talk about a very interesting topic here. The difference between a holding company and a conglomerate. What is a conglomerate and what is the a holding company? So I just wanna talk about this and also make an example of the two companies and how they differ from one another. So let's just jump on it now. So a conglomerate is a multinational industry company with the combination of multiple businesses entities operating entirely differently in under one corporate group. So it's one it's one corporate group with other businesses under it, which operates separately and have their own businesses as well. So usually it's the parent company which has its main operation, and then it has many other subsidiaries under it. So it has its main operation, and then it owns other businesses as well in different fields of the industry. So a conglomerate is a large corporation, and usually they are multinational. They operate in different parts of the world. They do not operate in one country. They have like holdings in different countries as well. So moving on, just to point out some key takes on the conglomerates. Say there is a main business operation, right? And then there's several other independent businesses. There's other independent businesses. So the parent company owns the controlling stake in the smaller companies that each conduct business operations separately. So the holding company owns a control stake on the smaller companies, right? And then the parent company can take or cut back its risk from being a single market by diversification across several industries. So it's their way as the parent company to diversify, to venture into other industries. And then sometimes like conglomerates can be like too large to be efficient, and then sometimes they have to de-invest in a certain business or even spin off some of those businesses and list them as a separate entity. So a conglomerate owns a lot of businesses. They own they also have a controlling stake on those businesses, and they also have it also has its main business operation, but also operates in other businesses and owning a controlling stake. So just to name a few here, so I can give you guys an example of like a conglomerate. So there is 3M now. 3M is the largest conglomerate in the world by market value. So it has like 126 billion valuation. And then Honeywell as well from the United States, United Technologies as well, and then Siemens from Germany, and the Dyna Group. It has a 90 billion market cap, and then there is General Electric. So these the largest ones in the world. So there's Philips as well from the Netherlands. So the one that I took interesting, and then to try and explain it more in detail is General Electric. It's General Electric. So General Electric, people are more like familiar with General Electric, and General Electric is a multinational American conglomerate. It was founded in New York, but now it has like headquarters in Boston as of 2018. So the company itself operates in segments such as like aviation, healthcare, power and utility, renewable energy, and digital industry. And also it has like manufacturing and has like finance operations as well, and also does some venture capital. So you see that it's one company, but it has like operations in different sectors of like the industry. So to make this one more interesting, General Electric was founded by Thomas Edison. Then Thomas Edison, of which we all know that he's the one who started, like who founded like the light bulb, and then J.P. Morgan was the financier at the time. He financed like Thomas Edison to start up this large corporation. So these were the two men that started General Electric. So to make this even more interesting, right here on this picture here, as you can see, this is Henry Ford, the founder of the Ford Motor Company, and then this is Thomas Edison, and then here on the right it's Heavy Firestone. So these men, like the ones who started like who were the pioneers of industries back at the time. Ford created the first motor, Thomas Edison created the light bulb, and then Heavy Firestone as well created the first rubber tire in the world. So as you can see, that saying that says like you have to keep your circle really tight and small, and then this was the circle back in the time, and as well they were still friends with the largest financier, J.P. Morgan. So moving on back to General Electric. So General Electric operates in aviation, right? And then it has healthcare interest as well, and then it has interest in power, renewable energy, and like some digital stuff that they are doing, manufacturing as well, and also they have like interest in finance, and then they also do like venture capitals and startups as well. So I think I've just briefly explained there, Gutsugena, what is a conglomerate and what does a conglomerate do as well. So moving forward, what is a holding company? So as we saw that there we are talking about a conglomerate, but here it's another different story here on this one. So a holding company is a business entity that doesn't manufacture anything. You see, it doesn't manufacture anything or sell any products or offers any services, or it doesn't even conduct any other business operations itself. But what does it do? It holds company, sorry, it rather it has a holding or controlling stock in other companies. So for it to operate, it controls or has like holdings or own shares in other companies, you see. So the key takes here on the holding company is it owns assets of other companies, right? Or and only do oversight of how those companies are operating, and then it also has like an impact on how the company manages its decisions, right? So it is not actively participating in the running of the business's day-to-day operations, right? And also holding companies are protected from losses occurred by a subsidiary. If they own let's say 30% of a certain business, if that business however happens it goes bankrupt, the holding company doesn't go bankrupt or else being chased by creditors, or it can be maybe by law filed or by something. It will only be that company that goes bankrupt or get liquidated that's going to suffer the losses, not the holding company. So a brief structure of how a holding company looks like. So let's say this is the holding company right here, right? And then it owns a 66% of, let's say, Toyota, and then it owns 34% of the Tetsu group, and then as well it owns, let's say, 100% of another operation, and then owns another operation of another company. So whatever these companies are making money wise, when they're making revenue, the holding company benefits as well. If Toyota makes money, the holding company benefits. If the Tetsu group makes money, also the holding company makes money. As you can see, these are separate entities, right? And this one is the separate entity. What it only does, it can oversight like the operations, but doesn't get to be in, doesn't do anything like on the everyday operations of the company. So they just do the oversight and have an impact on the decisions of the management. So the one that I want to make an example of here, it's the African Rainbow Capital Group. So African Rainbow Capital, as we know that it's South African. It was started by businessman Patrice Motsepe. So ARC is a fully pledged, owned and controlled company which focuses on opportunities in the South African and African financial services and has diversified investments in non-financial industries, and also focusing on acquiring a shareholding in businesses that deliver exceptional returns. So they look for other companies. They look for other companies that are successful, and then they try to acquire a controlling stake on those companies. So we can see that here, African Rainbow. This is the brief structure of African Rainbow. I took this data from their website, right? So Ubuntu Boto Investments owns ARC, and then ARC has other funds as well. This is just their structure. I took it from their website, but their operations are something like this. So they have interests in communication. As you all know, this they own the Rain network, and they have interest in mining, business processing, agriculture, property, insurance and asset management, and they also have interest in digital banking. As we know that they own the Time Bank entity, and there's a recent one that I saw that it was ARC Healthcare. So they are pretty much diversified, for a company which is less than 5 years old, but they are really pretty much diversified. So in closing, there's many other holding companies out there. There's many other holding companies out there, like the ones that we saw here, which are conglomerates, the largest one, conglomerates in the world. But there's also many other holding companies out there, with the biggest one that we know by far in the world is Berkshire Hathaway, which is owned by Warren Buffett. And then there is Johnson and Johnson, which has like many subsidiaries under it. And then JP Morgan Chase, the bank JP Morgan Chase, its focus is on financial, on mostly on the financial sector and industry. And there's Google, and then from our South African front, there is Remcro, and then there is Remate, and Imperial is also a holding company, and then the biggest one of them all is Richmond, which is owned by Johann Rupert. So I hope this video will be really educational into knowing the difference between the two company structures, the conglomerate and a holding company. So you can follow me on TradingView. My handle has changed to Sibo Dlamini because of there was some issues between me and the TradingView team because somebody was trying to steal my profile, so I had to change the name. And then on Facebook there's Interpret Asset Management, which is the business page, and then on Twitter you can follow the business page as well, Interpret Asset M, and then my personal handle, which is Smo_Dlamini. So guys, thank you for taking part in this video. I will really try to improve on our future correspondences, and know that trading CFDs products involve a significant level of risk in it. So you cannot trade money you cannot afford to lose. So it involves risk trading. You cannot trade to invest money you cannot afford to lose. So thank you very much. I will see you on the next video. It's done for me for now. Thank you very much.